Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Yatin, we saw a good close to the month of May, right? The Nifty has gained somewhere around 2% for the month of May, but for the week, we've ended on a flattish note with a negative bias. Today, we started the June series on a subdued note. Of course, the texture of the global markets has changed, given the fact that a US appeals court has reinstated Trump tariffs temporarily. So this confusion around tariff is causing global markets to sway as well. US futures are trading in the red, although the European markets have opened up or are trading in the green. But yes, there is a lot of confusion around tariffs, and that is something that is weighing in on global markets. But for our markets, I think there is also profit taking that's underway, which is why I think the June series has started on the back foot. But the broader end of the markets continue to outperform. Even today, the mid and small cap indices have fared much better than what the Nifty has done. But the Nifty managed to hold on to that crucial 24,750 mark, 24,700 being a crucial support level on the index. In terms of the other internals, look at the market breadth. It's skewed in favor of laggards today, and if you look at the India VIX, it has cooled off further to 16 levels. Mind you, the India VIX is already at 1 month low. Aside of that, if you look at the sectoral performance, PSU banks saw hectic buying today, almost 3% uptick on the Nifty PSU bank index. But barring that, and of course the Nifty bank index that ended in the green, all the other sectors were among laggards, and IT, metals, all these global facing sectors were under pressure, and so was pharma. In terms of the weekly moves, FMCG, CPSE, these are some of the indices that were under pressure. But for the week, PSU banks, Nifty Bank and Realty are among gainers. For today, in terms of gainers, you have the likes of Eternal that saw good gains of 4%. I think it's the MSCI rebalancing that came into play in the last half an hour of trade, and some stocks were gaining on the back of that. So Eternal was gaining, SBI was gaining, of course, because of strong buying in PSU banks. HDFC Bank was doing well. L&T, Dr. Reddy's, these were some of the other gainers. On the flip side, despite posting a good set of numbers, a steady quarter, we saw Bajaj Auto coming under pressure. That was the top laggard, lost in excess of 3%. Hindalco was also among laggards, and so were IT names like HCL Tech Mahindra under pressure. But Yatin, broader end of the market saw a lot of movers and shakers. I want to also talk about the gold financiers. Government is batting for some relief for these gold finance companies, which is why Muthoot Manappuram were also flying high.
Yes, definitely. And today the mid-cap indices were also quiet, almost a flat close for those benchmark indices. But the advance decline ratio remained at 2:3. So the market breadth was not that bad, despite the fact that we are down on the start of the series. Now PSU banks, clearly one of the top gaining sectors, but talking about Nifty 500, the top gainers are from the power sector. So we have Suzlon post strong quarterly numbers, which we'll talk about in details along with the good guidance. The stock moved nearly 10%, R Power 11% higher for that penny stock. But what was doing well is RR Kabel, Wockhardt Pharma and CCL Products. All of these stocks moving anywhere between 8 to 10%. Obviously, Welspun Living Post the numbers saw a downtick of 10%. Q4 was supposed to be good, but results were not up to the mark. Stock fell 10%. Mazagon Dock, it made the debut today in June series with inclusion in the FNO series. However, because of weak numbers, the stock was down 7% in trade. IFCI and Chambal Fertilizers were the other stock wherein we saw sharp profit taking. But Eternal, after the MSCI rebalancing, today gained nearly 4% in trade. BSE saw short covering at the start of the series. Stock was up 9% in trade. And also, if you talk about stocks like Welspun Corp and Bharti Hexa, were up anywhere between 2 to 4%. And clearly, these stocks were making new 52-week highs.
All right, those were some of the movers and shakers, and of course, result reactions as well. But Bajaj Auto, in the last leg of the earnings season, reported numbers yesterday post market hours. Numbers were pretty steady. on all parameters.
in line with expectations.
But I think concerns over valuations, also the fact that it has lost market share in domestic sales, those are some of the factors that were weighing in, but also the fact that China has put curbs on rare earth magnets, right? And that's a key component in EV manufacturing. So because of supply chain concerns, there will be regulatory concerns in procuring these elements or components. Because of that, I think EV production will get impacted from July. I think that was another factor that weighed in on share prices of Bajaj Auto. But taking stock of the numbers, margins remained above 20% for a 6th straight quarter, although they were flat. If you look at if you compare it with the same quarter last year, revenues also missed double-digit growth due to temporary suspension of KTM exports. Final dividend was also announced at 210 rupees per share. CV, commercial vehicle revenue growth continued to be in double digits. Exports also, in fact, exports did well, recorded a 20% growth in volumes on a YOY basis. And premium motorcycle segment, driven by the likes of Triumph, also continued to gain momentum in the domestic market. The management was on CNBC TV 18. They have said that their market share in 125cc segment is the core focus area going forward. They are looking at regaining lost market share in 125cc segment, and in fact it has also said that they are going to grow at nearly twice the pace of the overall market when it comes to this particular segment. New launches are expected to spruce up market share in this segment, and they are also intending to take controlling share in KTM going forward, subject to regulations, but this the management had already pointed out earlier as well. But brokerages, some of them are cautious. Jefferies, for instance, has said that valuations at 26 times FY26 PE is not looking cheap. It has a hold rating on the stock. Target price is at 8,000 rupees. It is positive on the growth outlook for domestic and export two-wheelers, and it is also optimistic, or it likes the rising EV franchisee when it comes to Bajaj Auto, but they are concerned about the market share dip in the domestic motorcycles. They are concerned about a decline in volume share in India's two-wheeler exports as well, and they are expecting a 13% EPS CAGR, or compounded annual growth rate, over FY25 to FY28. So that's a cautious view. But CLSA, on the other hand, has an outperform call. Target price is higher at 10,149 rupees per share. EBITDA margin, according to CLSA, was 20%, of course, flat and largely in line with expectations. And they are building in a volume growth of 7% in domestic two-wheeler space, and they are factoring in a 12% export volume growth for FY26. But Bernstein has the highest target price on the street, with an outperform rating and target price of 11,000 rupees per share. And they are taking heart from the fact that margin performance was decent despite headwinds from KTM export suspension, and the overall, regardless of the overall operating environment, the margin growth has been pretty okay, according to Bernstein. But stock has seen a good recovery. Yatin, if you look at April lows, the April 7th lows, since then the stock has recovered 18%.
Yeah.
Perhaps that's why I think Jefferies is a little cautious, saying valuations are looking stretched. But the stock is around 8,000 or so, and target prices are in excess of 10,000 as well. So let's see how things really pan out, especially in terms of this rare earth magnet that curbs have come in from China.
Yeah, I think the curbs are for US. Indians will have to apply, and that processing will take time. It might disrupt production, is what most auto companies are talking about. Obviously, it needs to be seen whether or not it continues for long. But yes, Bajaj Auto clearly 3% under pressure. Valuations, according to brokerages, have been on the richer side. But Suzlon, clearly the stock of the day, 10% higher for that stock. Wind power in general is witnessing good traction. In fact, first time in many years, Suzlon gave out guidance in which they are expecting a 60% growth year on year, even at a higher base. Not only that, they are expecting the margins to improve from here on because of the operating leverage benefits. And if you talk about the 8 gigawatt installations, they are seeing that traction also from FY27. They have a 31% kind of a market share when it comes to the wind power segment, with a 6 gigawatt kind of order book which is already there. In fact, this order book is expected to improve in the coming quarters. Now, Morgan Stanley is overweight on the stock of Suzlon with a target of 77. Obviously, to yesterday's close, this means a 20% kind of upside, and with the stock moving 10%, another 10% is where Suzlon's target is there when it comes to Morgan Stanley. Now, Morgan Stanley believes that the wind turbine generator volumes, revenues and EBITDA are quite strong for Q4, and not only that, the guidance of 60% is something which impresses a lot of investors. In fact, they have guided for wind turbine generator segment contribution margin of nearly 23%, and not only that, with the order book moving higher, execution moving higher, the operation and maintenance business will also kick off 3 years from now, because typically there is a 2-3 year warranty in which the orders are covered, but post that the O&M revenues also start kicking in, and that is a 50% kind of EBITDA margin business. So when it comes to Suzlon, a lot of brokerages are positive, and obviously the execution for FY26 is what we will watch out for, because that will be the key re-rating factor for the stock along with the order book progress.
Of course, execution, they all focus on that, and re-rating of course would depend on that, but the stock of Suzlon has been such a breakout move it has seen in the last 2 months. It is up almost 40%. Even the last 1 month performance has been quite phenomenal, 30% almost. But technical experts are saying that it could retest its 52-week highs of 86 or thereabouts, and the trajectory looks on the upside at the current juncture. That's about Suzlon. But another stock that actually turned out to be an earnings disappointment, and it was reacting to it, was Alkem Labs. That stock was down somewhere around 4% or thereabouts, primarily because of a miss on the margin front. Margins contracted and fell to sub 13% levels. Although the management has said that growth in the India business has been pretty healthy, and it has seen improved profitability and margins for the full year. International businesses, excluding Americas, have seen good traction, but Jefferies has a cautious view on the stock. In fact, it has said that higher R&D spends, complex product launches and upfront costs are expected to keep margins under pressure throughout FY26 as well. The company of course expects the benefits of these investments in the long term, but in the shorter term or the medium term, the margin pressure could persist according to Jefferies. Now, it has an underperform call on the stock with a target price of 4,460, which is a 16% downside if you see from yesterday's close price. It has taken note of the fact that margins are lower, but it has also pointed out that the company is pivoting towards accelerating its growth after 18 months of margin improvement, and it has guided for high single-digit growth, revenue growth in FY26, which will largely be led by the India business. It has guided for double-digit revenue growth for FY27. EBITDA margin guidance for FY26 is flat by the company, of course, on the back of higher R&D spends, and that's why it has cut its FY26 to FY27 EPS estimates by 3 to 6%. And with valuations at 23 times FY27 EPS, Jefferies sees limited upside on the stock. Of course, it has flagged the need for strong execution on growth initiatives, and it also awaits more clarity on the impact of these investments going forward. If you look at Nomura, it has a buy rating. Target price is higher at 5,430, which is just about an upside potential of 2% or so. It has said that guidance has been a mixed bag for FY26, and it's saying that the company is expecting effective tax rate to go up to 35 to 37% in FY27, vis-a-vis Nomura's estimates of just 20%. I think, which is why the target price isn't that higher if you look at the current stock price. But it is also pointed out that the company is expecting domestic formulations growth to be 100 basis points ahead of the broader market, and also the company is hoping to be in the first wave of semaglutide launch in March 2026 in India. Now, it is planning to launch that generic drug in India, likely at the time the patent expires in March 2026. So yes, that's going to be the next key trigger, but of course, as of now, margin pressure will remain on the back of the higher R&D spends that the company needs to do for its upcoming product launches.
Yes, and clearly, the numbers also were quite muted. Post the numbers, I think the stock yesterday also saw some negative reaction, and post the conference call also, stock is under pressure.
All right, then, those were all the stocks that were on our list this afternoon, but we've come to the end of the week and come to the end of the month as well.
Yes.
We'll start a brand new month on Monday, and June has been, I think, kind to markets, as far as I know. So hopefully we can reclaim those 25,000, 25,500 kind of levels this month. But for the month, I also want to point out we have underperformed the US market, because US markets have done extremely well, with Nasdaq gaining 10% for May. But let's see, May was okay for us. Hopefully June will be better. On that note, would like to take your leave. Thanks a lot for tuning in to Closing Bell on Money Control. Have a great weekend and come back and join us on Monday with the markets. Thank you for watching.